Okay, Scott. Okay.
Awesome. Well, good morning, everyone. My name is Scott Rogowski. I'm the director of the Finance Center for Northern California SBDC, Small Business Development Center Network. This is our small business town hall that we bring to you every Monday and Wednesday. Today is Monday, September 28th. We've almost made it through September. This is our 63rd session. We're happy to have a guest speaker on today, and then we're also very happy to have SBA on to kind of go through the fire updates and COVID loan updates. So we are all in this together. And jumping into Northern California SBDC, this is our 40th year of existence as SBDC, like our network and our organization. We are supported by SBA, Small Business Administration, and also the state of California, which is the Governor's Office of Economic Development, which is called GoBiz. And because of this funding, we come to you at no cost for one-on-one advising that's 100% confidential, as well as workshops and webinars such as these, and also educational events. We offer all that at no cost to you because of our funders. Before COVID, we specialized in everything as far as helping businesses start, grow, access capital, and with marketing and e-commerce, international trade, all manufacturing, all different aspects of what it would take to run, start, grow, or possibly sell your business. During COVID, we've had to become experts and help businesses become more resilient, help them with their continuity plans, and then also look to possibly selling, succession planning, and just accessing the right type of capital for the time of need that they may have for the disasters, whether it be COVID, the pandemic, civil unrest, or the fires, or maybe just trying to reopen and kind of, as your counties and cities reopen, kind of helping to get capital as far as like possible gap financing to get there. So that's what we do at no cost for you. The Finance Center is, we cover regional, all of Northern California, and that is for the most 36 northern counties in the state. We go from the Oregon border down the coast to Santa Cruz. We cover all 9 counties of the Bay Area, southeast to Stockton, and then back up through the Nevada-Oregon border. Again, I'm the director of the Finance Center. We also have Sunita Maharaj. She's the associate director of the Finance Center, and we are going to jump into this today. So we have a disclaimer. We're going to kind of go over the COVID, the EIDL COVID, and then the EIDL fire parameters, the PVP, which is Paycheck Protection Program, required docs. I'm sure we'll never forget what PVP means. We'll go into SBA updates. We have the district director for the Sacramento district office, Heather Lutzy, on the call, and a couple of her people that work for her. We also have upcoming webinars, and then we have our guest speaker today. We have a credit repair expert. So some of you may be experiencing that as we kind of go through this rough time, whether you're trying to pay off credit cards or pay them down or get that next loan or build your credit from 600 to 650 or 700 so that you can get qualified for that next loan. We have a great credit repair expert coming up soon. So quick for our disclaimer, we have, we all know that things are changing all the time. This information was correct when we put it together. This is a disclaimer we read all the time. There's a small print disclaimer on the bottom if you want to read that. But things have not changed as dramatically as they were from the beginning. Things are a little bit slower now as far as change goes, unless there is new law that gets enacted and then we can act on it right away. So the EIDL Economic Injury Disaster Loan, there is a little bit of a discrepancy. I'm not sure why. I'm not sure if it's on the application when you apply or it's what you may have heard from somebody. But the EIDL loan does not expire this month. The EIDL loan does not expire on September 30th. It does go through the end of the year. What date is it actually, Heather? Is it?
December 31st.
31st, okay.
Yes, and that's for the economic injury disaster loan. So there's different dates for the fire economic injury disaster loan, but this is COVID related.
Okay, so for the COVID-related, the economic injury disaster loan that we've been talking about from the beginning, when it first launched, when all this first started, that does not expire Wednesday, even though the application may say that at the top left. It does expire December 31st. So please apply if you haven't applied, or if there is a reconsideration, you're not running out of time, you can still get approved for this loan, even if you're a 501c3, C4, or C6. I had somebody call me about a C7, so unfortunately that's not one that is approved through EIDL, so there might be other means of doing that through a possible state guarantee loan. The EIDL advance is closed, so if you do apply for the EIDL, you do no longer get the EIDL advance, just the loan is available, and please don't hesitate to apply. If you're wondering when the PPP ended, it ended almost 2 months ago. Crazy to think about that, but it ended. So we are going through forgiveness. Some lenders are going through forgiveness. SBA is going through forgiveness. Treasury is trying to figure this out. So we're all working together. We have not heard too much progress on that. If you were to look at the COVID EIDL, economic injury disaster loan, which Heather was talking about, then there's a fire EIDL, economic injury disaster loan. You would think that they are very similar. If you look at this chart side by side, the biggest difference is that for the COVID EIDL, it's 3.75% for for-profits. On the fire loan, it's 3%. They're both 30 years. The EIDL COVID, the one that we always been talking about, is 11 months deferred. Interest does accrue. Heather, do you know if there's a deferment on the fire?
Yes, there's typically deferments on any economic injury disaster loan. With respect to how long those are going to be, we're going to have to circle back. It's typically a 6-month time frame. But I'd also like to point out that this is for the economic injury disaster loan. SBA also supplies disaster loans to homeowners and renters. With that said, those interest rates go out for a term of up to 30 years, and the interest rate is at 1.18%. So it's well below market, and you know, obviously if people are in that situation, it's just heartbreaking, and we want to be able to assist in any way we can. So God forbid you're in one of the disaster areas now with the fires, but know that we have your back. We will do whatever it takes to assist.
Okay, awesome. Thank you very much, Heather. So we, as a team, we kind of went back and forth to try to show all the different parameters. So maybe next time we'll have that third column for personal loans, for the house loans, since it is, it's also as important. So for collateral for the EIDL COVID, it's $25,000 or more. They're going to ask for some sort of collateral. If you have it, great. If you don't, it's not going to hurt your ability to get the loan. And then a personal guarantee is required over $200,000. So for the EIDL fire, it kind of goes back to what normalcy was for business loans. Anybody that owns 20% or more will have to give a personal guarantee. Collateral is required at the same $25,000 mark. There's none forgivability. So no forgivability for the EIDL COVID and the EIDL fire, no forgivability. Within that, you can use the money for like all working capital to cover ordinary business and operating expenses. We still get questions around EIDL COVID if you can use the money to kind of like pay back what you lost, or it's lost sales, and that's not the case, unfortunately. It's just whatever the money it normally takes, like rent, utilities, payroll, interest, mortgage payments, advertising, whatever it takes to run and operate your business. So you can't use it to go buy equipment or anything that's not normal for an operating month to month. Unfortunately, you can be very, very strict on how you kind of document what you're spending the money on. And then, yeah, you can't use it for tax liens or to pay off debt in full. You can make monthly payments, but not in full. So the required documents for PPP, depending on if your lender, you will know, I have heard from a handful of lenders, not 100 of lenders, but handful that are taking the forgiveness paperwork, and they are submitting it to SBA, and then SBA has 90 days to reply. So we have heard of some of this going on, but we haven't heard of a lot of successes or any type of forgivability being actually dispersed yet, unless Heather has an update on that. But I haven't heard of anything yet. So here's the application and then the instructions. And if you need help with the instructions, we're here for you at no cost. So this is the SBA portion. So this is the contact information to call disaster line, to email them for reconsideration. If you you were submitted, but then you got declined, you can reconsider. And then if you have questions about the servicing of that, you can email them or call them. But now I'll hand it over to the district director for the Sacramento district office, Heather Lutzy, and then she can give us an update.
Thanks so much, Scott. So obviously the agency has a lot going on currently. Just to kind of preference, everybody's very familiar with the last several days and unfortunately weeks with the fire issues. As of Friday, throughout the nation, SBA had 211 declared disasters. So that's in addition to our COVID disaster, which of course is nationally. There are different programs and products for each of these. So with respect to the update that Scott gave on the COVID stuff, as I had stated a moment ago with the physical disaster, if a business loses their business due to a physical loss, not economic, but physical loss, and then homeowners and renters, those all have different parameters and different terms of the transactions. Well below market interest rates, we will try to expedite those deals. Clearly, it's a priority for the agency. The FEMA is our partner when it comes to economic injury disaster loans. And FEMA sends out to our agency a daily report. The report today is basically talking about the glass fire, all of the wildfires in California, and the map is just astounding. As a matter of fact, I will send this over to Scott and Alan so that they can see exactly what we're dealing with. But it's really troubling to see all of this. Some of the fires have been contained or starting to be contained, which is great news. But you know, with the areas that we're dealing with now have seen horrible devastation in the past. So Calistoga, Napa, St. Helena, that's just a tragedy. And then now Paradise, Magalia, those are all under evacuation warnings again. So Butte County has become a much larger fire than it was. With respect to the agency support on that, again, different parameters. The way that the physical disaster loans work is that we tell applicants not to wait until their insurance company, you know, pays them or kicks in. Apply immediately. And you can do that directly on the website. It's a very simple application process. It is quite different from the COVID process, but we will walk you through everything. We do have disaster centers popped up virtually, and you can either Skype with those or through Teams app or via telephone. And the loan officers will walk you through each stage of the application. With respect to if you've lost documentation, you've lost your identity documents, whatever the case is, we will assist in getting those back. We typically partner with the state and federal agencies for all of those. So we can actually electronically provide your tax returns. You don't have to worry about any of that. So we just want to be a support for you in your time of need, and just to get the word out that we are, you know, ready, willing, and able to assist. Again, as I had stated with the home loans, for the current interest rates, 1.188%. Typically, those run 30 years. What else can I tell you here? You can apply online, and it's disasterloan.sba.gov/ELA. So Elephant, Larry, Apple, ELA. And that'll get you to the Disaster Loan Assistance Portal. Again, different portal than the COVID, different application process, but we will assist you with that. What else can I tell you? Clearly, the weather forecast looks fairly bad as well. I know Alan had mentioned previously that the red flag warnings are supposed to sunset tonight at 9 o'clock, so we're keeping our fingers crossed on that. And hopefully we don't have these north winds kick up again and exacerbate any more of this. With regards to the Payment Protection Program, obviously our congressional leaders are still working out something, and as soon as we have confirmation of what that is, we will get that information out to you. But in any case, I would like to turn it over to Janelle Green, who is actually going to tell you what we have upcoming for our webinars this week. Janelle?
Thank you, Heather. Appreciate it. So just some updates. This Thursday at 9 a.m., we're going to be delivering a detailed overview of SBA programs, including COVID-19 assistance, but also standard loan programs, federal contracting programs, and resource partner support. So that's at 9 a.m. on Thursday. And then Thursday at 1 p.m., we're going to be partnering with the Capital Region SBDC on a webinar on SBA resources and also how to pivot your business. We also have others scheduled for the week as well. You can visit our district office website calendar by going to sba.gov/ca/Sacramento, and there you can see the calendar with all the week's events and beyond, and we update it continuously. So there you can check out the dates and register. So with that, I'd like to turn it back to you. I appreciate the opportunity.
Thanks, Scott. I think that kind of, thank you, Janelle, pardon me. And Scott, I think that concludes our update for the day.
Okay, awesome. Thank you very much, Heather. Thank you, Janelle. Appreciate that. Great update, and it's very, very current. So for any of you that are struggling with the fires, we're here for you to help you with your records, help you with your applications, help you kind of put things back together, and get you the capital that you need to kind of get through this time. So thank you for the updates. All right, so Alan, we got some upcoming webinars.
Sure. So we've got a few coming up in the next week. We'll have one tomorrow, kind of towards the end of our how to launch your online businesses. So if Shopify is where you'd like to go, then we've got a webinar tomorrow that Megan is running for us, that she's run a couple of times for some local centers. It's about how to get working on your own to get your own Shopify store up and running. So if you need to get some income coming in and you have a retail establishment, retail option, getting that retail option available in Shopify is one way to do that. On Thursday, we've got a session on managing your cash flow. So this is Paul Barzo, one of our regional advisors, has done a session a couple of times for us before on best way to manage and forecast your cash flow in the world we're facing right now, including the tool that he's created, which is a spreadsheet which you can use to do monthly forecasting in advance. We've got some stuff from our restaurant program on how to launch a cottage food business. That's next week and the week after, Monday the 5th and the 12th. And then on the Thursday, we've got our kind of all-in-one how to get yourself business online and generate sales. So that's our online specialist who's going to talk about all the things you need to know and get you ready to start reaching out to connect to the audience you got, get the leads you need, and start pulling some revenue in. everything there, that's everything you can see the details of all of those on our link to the SBDC.events network calendar. And on there you can see not just the stuff that the region's doing, but stuff that's being done by all the different centers. We have 20 odd centers across the network, all of whom are doing webinars. And basically now, because they're all webinars, anyone can go to anything. So have a look on that network calendar. There's some great stuff on pretty much every topic you could want to get to, as well as the stuff that we're doing here on Mondays and Wednesdays.
Awesome.
Back to you, Scott.
Thank you very much, Alan, and appreciate that. So a little bit of update for everyone on the call. Today is our last Monday webinar for this Monday, Wednesday amazing thing that we've been able to put together for you for the last, well, 63 sessions, which has been, I don't know, 5 months maybe. We are now launching just Wednesday webinars. So starting this Wednesday, we're going to be every Wednesday. We obviously haven't filled the whole month of October yet, but we are getting there. And so we are going to have live updates from SBA on this Wednesday for their loan updates. So they're going to actually go over all the loans that are available and to help businesses either start or grow or thrive or survive. And then Wednesday, October 7th, we're going to jump into our Case Force Attorney Coalition. So we're going to continue that every other Wednesday instead of every Wednesday. And then we're just going to kind of filter in new aspects of running your business or surviving your business, like what we have today with Pat Welling. So I think before we get to Pat, but I'm going to leave this up here so you guys can all learn about Pat. I think Sunita's going to kind of go through some questions, and then she's going to introduce Pat, and then we'll go from there. So Sunita.
Thank you, Scott. Good morning, everyone. I just wanted to go through some questions right now because there are a lot of PPP questions, and I just thought we'd get these answered right now before we moved on to the credit portion of this. So Chloe is asking, some of her clients got approved and accepted for a loan. Actually, this is, I believe, for the EIDL loan. They received their information in July, but every time they sent an email to SBA to ask when they get when they'll get their promissory note, they are told we're working on it. Is there anything that SBA would suggest that we do? And if you guys are not on the call, then I can ask this question again later.
No, actually, Sunita, we're here.
Okay, thank you. Sorry.
No, that's quite all right. With respect to the economic injury disaster loans and the approval of those, we have received, since the program opened up, in excess of 15 million applications. So I want to just kind of state the gravity of the situation. And yes, we are definitely doing these a lot slower than we would like, but we are working our way through these COVID EIDL loans as quickly as we possibly can. If a specific borrower needs, special assistance, don't hesitate to reach out to your district office, either San Francisco or Sacramento, and we could try to see where we're at in the process. But these things are taking time. Unfortunately, it's been exacerbated by the amount of fraud coming through the system. So we have to vet every applicant and application to make certain that we don't have identity theft or any of the other things. So in any case, we just sincerely ask for your patience, and don't hesitate to reach out to either mine or Julie's office for a status update, and we'll do our best to get that for you.
Thank you so much, Heather. Let's see here. Answer the slide. Another person is asking, we received a lot of these questions. I think I've received 5 of them so far. People are asking, when should they apply for forgiveness? I've answered some of the questions as soon as you have exhausted the money. So as soon as you've spent the money appropriately, then you can apply for forgiveness. Another one of our advisors is saying that, forgiveness has not happened yet. They have not approved or denied it yet. And that is going to take some time. I believe the stats that you received, David, was 96,000 applications. So if you just think about 96,000 applications, it's going to take some time for them to get through them. So another person's asking, is the $150,000 and under going to be automatically forgiven? And at this point in time, we don't have any legislation on that at all. Now, until that is signed into law, that is still hearsay. It's not something that the banks are doing automatically. I believe that some banks are holding off until that legislation comes in, but it's not all banks. Some banks have the application forgiveness online, some don't. We do have the application that we can provide to you because that is online on SBA and Treasury. We can also help you fill that out and make sure that you have the correct documents. So it's really up to you, Mary, and the other clients that are asking, when should we apply for forgiveness? And we are so sorry that we can't give you a specific date. Everyone's going to be a little bit different also, because did you do the 8-week? Are you doing the 24-week? Have you spent all the money appropriately? What is really your circumstance? So every single person is going to be a little bit different. That's why we ask you to get hooked up with an advisor with the SBDC, with the Finance Center or your local center, so that we can help you directly one-on-one. So sorry, that was a long answer to the questions, but it is the different ways of asking the question, and it's been several of them. So I want to make sure that I was hitting all of them at the same time. Let's see here. Brenda, I received the first round of PPP loans. Will my credit score affect my ability to get a second round of PPP loans? Now, Brenda, we don't even know if a second round is approved or not yet. Like, we're still waiting on that as well. So hopefully we'll find that out. I don't know, you know, once they come to a decision, can make a decision if there is going to be a second round or not. Also, your credit score, I don't know exactly how that works for your credit score with the PPP or not. Heather, do you happen to know if the lenders, they can?
No, so again, because of the second round, we don't have any of the parameters on that at all. But with respect to the way that it works currently, that the credit scores really, from the bank's perspective, would have been set by them. We didn't have guidance from through the CARES Act. We just were looking at, you know, bankruptcy, foreclosures, kind of propensity to repay, just in case the loan was not forgiven. So then you would still be responsible for that 1% loan. So unfortunately, I know Sunita has said this just a couple of times in the last few minutes, but please be patient with us. As soon as Congress comes out with additional guidance, we will know more. If you have a PPP loan that you've already spent the funds on, as Sunita stated, please move forward with your forgiveness application with your lender, because that could take up to 60 days, and then SBA has an additional 90 days on top of that to provide the forgiveness. So you're not going to, there's no downside to applying for the forgiveness right away. Did that answer the question? Kind
yes.
of roundabout way.
Thank you very much.
Sure. I'm just seeing these through here too, and there's a lot on the PPP.
Anna is asking how to make the payments on their EIDL right now. And would they just go through servicing? Do you want me to provide that number?
Sure, you can do that. Or with respect to the EIDL loan, they can do it through pay.gov. Referencing the SBA loan number, or they can go through the servicing center or even our Denver Finance Center. So yeah, if you've got the number for servicing there, Sunita, and can post that, that would be fantastic.
I do have it for Birmingham and also El Paso, but I don't have it for Denver. But if you want to just shoot that over to me, then I can provide it.
Will do.
Thank you very much. Leanne, before we move on with Pat, let's, this is a very long question. I'm not really sure what it's asking here because I haven't been able to have a chance to read through it. But Leanne is asking, I use ADP for payroll and they have set they have a set of PPP loan forgiveness reports. My issue with those reports is that one hourly employee had one paycheck in 2019 with a lot of overtime, and ADP stated that the SBA requires selecting the highest paycheck in 2019 and annualize it to determine the employee's paid over 100K. For this one employee, his W-2 for 2019 is $49,000, but due to the one paycheck being annualized, he becomes a $100,000 employee for 2019 for PPP loan forgiveness. Is this an accurate statement from SBA? Any experience with this?
Unfortunately, I have not had experience with that, but I think more so than a paycheck, you could look at the W-2s for 2019. So I would circle back with ADP. Unfortunately, I have not come across that before, but I would circle back with them and see if you can get additional documentation. And then truly, it doesn't really matter what ADP says, it really matters what your lender says. And if your lender is on the same page as you with respect to calculating that employee's income based on the guidance from Treasury and SBA, then that's the way you go. Whatever ADP states, they are just a payroll company, not the actual lender on the loan. So again, talk to your lender and see if you can work it out with them. If not, reach out to your local district office and we're happy to help.
Thank you, Heather.
Sure.
Okay. So I would like to introduce, we're going to move on and we're going to go into our credit webinar right now. And I would like to introduce Pat Wally. Let me get up my information here so that I can introduce him correctly. So our next guest is a U.S. Navy veteran and a national trainer. He has traveled the country for nearly 30 years training businesses and employees. He finally settled here in California. He is a talented credit improvement specialist and has helped so many people improve their credit profiles and learn how to win the credit game. So I'd like to introduce you to Pat Wally. He is one of our advisors on the Finance Center, and he can be reached at our 833 ASKSBDC number, and we can get you hooked up with him. Thank you. Pat?
Scott, can you stop sharing your screen so that Pat can share his?
Yeah, let's do that.
Are we on?
Yes.
Cool. Well, welcome everybody. So glad you joined. If you've got great credit, we're going to also talk about identity theft. It was mentioned a little bit earlier. It's at unprecedented high levels because so many people are online doing normal business, plus a lot of working at home. So there's some things we're going to cover that. I'm not going to go too deep into the details, just some resources that we have. And then at the end, we'll have some time for questions and answers. Basically, this is just how to take control of your credit during the pandemic. I mean, we've all had some changes in our business, and some of us have, as an advisor, I've seen businesses come and say, hey, we got declined because of our credit. The credit is not going to get you the loan. I want to get that out front. That's my disclaimer. Having a good credit score is not going to get you the loan. There's a lot of other pieces, but to get in the door, you got to have a good score. I mean, if you've got a 620, you're probably not going to get looked at for further evaluation. If you're up in most lenders require 650 or above. It's tightening up right now. Some 720, 750, you're going to get a lot better results. So we're just going to kind of run into this, why credit matters. And just to put it out there, most people would rather get a root canal than talk about their credit. Nothing against dentists, but both items, if you don't get a root canal, it doesn't get better on its own. Same with your credit. If you don't manage your credit, it's going to get worse and it doesn't take care of itself. So you got to have to take control of it. The big issue is access to capital. As business owners, I'm a business owner, you're all are business owners, you have to have access to capital or your business doesn't grow. And we want to help you get good credit so you get more loans approved at the best rates. Now, you can check your credit report. This is the report is where the data comes from Equifax, Experian, and TransUnion, and they generate the score. And the score is what lenders use and other institutions use to determine a risk analysis, basically. The lower score, more of a risk to the lender. A better score that indicates that you can manage your credit and you're able to get better rates and less interest rates, better terms on your loans typically. Now the SBA, it was interesting because the SBA, the EIDL loans for COVID do show up on your Experian report. They're supposedly not going to affect your score, but a regular SBA loan only shows up on a commercial report. So there's a difference between consumer and business credit report. We're going to talk primarily about your consumer report because as we saw, you do have to provide a personal guarantee for most of these loans. And one of the things you have to do is have a credit check, what we call a hard pull. And if your credit score is good, then you go to the next step. If it's not, then you get the dreaded decline letter. I'm sorry, your credit score isn't good enough. It doesn't tell you what about your score is, not right. But anyway, so you can go to annualcreditreport.com, annualcreditreport.com. I think we can put that link in the chat. This is something until the end of April. So they're offering this through April. The annual credit report will give you a 3-bureau full credit report. So Equifax, Experian, TransUnion, you can get a full version of your credit report. That's everything that you can show reporting, from student loans, foreclosures, collections, on-time payments. And you want to go through that report, and we can help you do that. That's what they've been sending a lot of businesses my way, to help them go through their report. And we have share links. You can upload that to our secure servers. And then we go through that with you and look for errors. There are errors that can cause your credit score to go down. For instance, one of my clients, he had a beautiful credit report, and he's like, my score is so low, he wanted to move into a new building, and his score was low. So we looked through, and the very last item was a collection for $87. Let that sink in. An $87 collection was like a 50-point drop on his score. So we got a hold of his lender and found out what it was. It was really just a mistake on the AT&T actually reporting his payment, and we got it taken care of. But imagine if you're looking at your score being in the 600s and you're not sure why. Your first step is go look at your report, and you can pull that. They allow this every week. As you can tell by the name, annual credit report, it used to be a yearly event, and now you can actually get that every single week through April. So that's because of the COVID. So you can also do disputes online or by letter. So if you see an error in your credit report, you can actually dispute that. Or you can sometimes just call the lender, and not the credit bureau, the lender. So the lenders report it to the credit bureaus, and these credit bureaus do not validate the information. They just take the information and create a score. So it's our job to manage this, and we can contact the lenders and say, hey, I made this payment, here's the proof, da, 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 da. Sometimes they'll work with you, sometimes they won't. If they won't, then you can dispute it online or by letter. And there's this wonderful thing called the Fair Credit Reporting Act. And if you request validation and they can't provide it, then you can send out I call it this prove it or remove it letter. So they have a time schedule that they have to do this on as well. They've got 30 days to reply to you. So you can send out a letter after the first round. You can send out a letter and say, okay, you need to prove it or you have to remove it. And by law, Equifax, Experian, and TransUnion have to remove that item from your credit report if they can't prove its accuracy. That's huge. That's huge, especially for some of these old bills that show up. You're like, what the, I mean, I can't tell you how many times I've gotten on the phone with someone and we're looking at the report and they're like, what is this? I have no idea what this is. That's what we do. There also may be some red flags for ID theft. FTC.gov has some great resources for reporting identity theft. Identity theft is real. Was just on the phone last week, I think it was, with a client, and she had an extra social security number showing up on her credit report. Now that may not necessarily reflect on your score, but that may be somebody using your good credit to get items for themselves. And if you don't look at it, it may show payment in good standing on whatever they're getting. But you don't want to just give your information out there for free. If anybody's looked at their credit report, it's complex. It's broken into sections. You've got your personal identification information like your name, addresses, and previous employers. check that for accuracy. If it's not accurate, that could indicate fraud. If you suspect there has been identity theft, your credit card is calling you saying that there's fraudulent activity, if you report it, okay, through FTC, and you report it as theft, then you can go back later and dispute the items that may have showed up on your credit report. If you don't report it and something happens on your credit report, it becomes very much more difficult to try and dispute that and get it off of your report. And it's not quick. I mean, it can take months. You may even have to go to court. So definitely watch your report, if nothing else, to just, I mean, a lot of you out here have good credit. This is not really a thing, but this identity theft is something everybody should be aware of. Go check your report and look for fraudulent activity. You can also check your credit score. Again, we talked about the lenders. A lot of them require 650 plus FICO. And FICO is just a company that generates, it's the Fair Isaacson company. That's the most common score. We all hear about FICO score. Now that's not going to be, FICO is not what is on Credit Karma, just so you know. That's a different scoring model. One of the questions I get is, how come my credit score shows this here and it's different when I got my credit pull from the lender? Well, that's because we use different credit scoring models. FICO is the one you want to look at. You can actually get your FICO score and it does not lower your score. It's another question. What if I check my credit score, does it lower it? So you can check your own credit score as a consumer. Does not lower it, does not affect it. And a lot of the banking apps, credit cards have mobile apps and they will show you get a FICO score. Most of those are going to be TransUnion. You can go to Experian.com and get a free Experian score every single month. They also have a paid service. It's like $24.99 a month. Gives you some identity theft monitoring, plus it gives you all 3 credit bureau FICO scores. So you can get your FICO score from Experian, Equifax, and TransUnion for a paid service for Experian. Other ones are free. You can go to Credit Karma. It gives you kind of an idea if your score is moving up or moving down. I wouldn't say that that's the one you want to use to generate an idea of this is my score. It's just a good tracker. It's free. They're going to inundate you with ads. And I mean, again, these are for-profit companies, so they want your business, right? There's some great tools on all of these resources help you with your debt. Maybe take a look at your credits, the way you use your credit, and some other resources there that are really good. So if you have any questions about that, we're here to help you and we can guide you down the right path, because it's really about creating a blueprint for your next step. Now, how the score is calculated, we're just going to cover this really quick. As you can see over here on the left, that 30 and 35, that's 65% of your score is calculated with 2 things: your payment history and the capacity of how much you are using of your credit card, and your debt. So if you have, say, a credit card with a $50,000 limit, but you're using $30,000 of it when it reports, that's over 50% utilization. That's going to drop you. That's a 30%, that weighs 30% on your overall score. The most important thing, payment history. And I know it's difficult. I know it's difficult. My heart is heavy with all this mess that businesses are having to deal with right now. It's like we're not being, there's like just like every entrepreneur, we're up against a lot, right? So, but we are all entrepreneurs. We got that entrepreneurial spirit. Make sure you make your payments on time. You start getting behind on your payments, that stays with you for 7 years. Let me reset that, 7 years. So a hiccup now, 7 years later, you're still dealing with it. Now, it doesn't weigh as much down the road, but it takes 22 years before it really starts not counting as much. So definitely make your on-time payments, okay? One of the easiest ways to get your credit score moving up, because really you just, again, want to get in the door. And if you want to get your credit score moving up, you can actually add somebody as an authorized user, or you can be an authorized user on their account. Quick example. My credit score wasn't always great, okay? I remember one day I was looking up at 500 going, one day I'll get there, right? One day. And we know, in the 700s that you're pretty much golden. Anybody that's got an 850 credit score listening right now, hey, you're in the very small minority of Americans. Most people are in the 600s to 700s. So if you're just looking for a 20-point bump, maybe, my wife had a credit card since the 80s, okay? And I was in the rebuilding process. I had new credit. I didn't have old credit. So I became an authorized user on her account, and she's an account in good standing. And now her credit became my credit. So it added to my overall picture, which increased my credit score about 25, 30 points. Now, I don't use the card. I don't even know where the card is. And I don't recommend being an authorized user on somebody that's got really shady credit. Okay, but check with your uncles, check with your spouses, family members. This is really good for helping kids get a credit established, by the way. So we use that for our children. I also used it for my credit rebuilding process, and it worked. I mean, it got me up above to where I can get my own credit card and start building my own credit then. So that worked really well. Another thing you want to do is don't apply for new credit. This is how you manage your score. Okay, you apply for new credit, it's a 10-point ding on your report. It's just the way it is. Even if you get approved, which I hope they change that rule sometime, because if you apply for credit and you get approved, I don't know why it counts against you, but it does. So you want to minimize how much new credit you're applying for. So again, be very strategic in what you're applying for and when you're applying for it. Again, 65% are those two categories. So these are in our control. Okay, length of credit, that's minimal control, right? You just keep good credit cards. A question I get asked is, should I close my accounts if I'm not using them? Well, I'll give you an example. I had a child support payment when I was divorced, and I paid on time, and I had it reported as good credit, and the day it closed, my credit score dropped 25 points. I was like, what the heck, man? It's because it removed one of my long-standing credit. So ideally, if your credit is in good standing, don't close the account. You can talk with us about it. If there's a yearly fee, it may not make sense, but it adds up. So that's a little add-on to that. So payment history and capacity and amount owed. This is huge. Capacity and amount owed. We talked about 7 years on your payment history. Okay, you want to keep your capacity below 50%. So things like student loans and mortgages and vehicles, I mean, obviously you're not going to be really, that's not what we're talking about. I'm talking about like lines of credit, credit cards. Okay, a lot of businesses right now that I'm talking with have used their personal credit cards, and they've gone up and up and up in use, and now their scores are going down and down and down. So there's a couple ways you can do that. One of them is to get some business credit. But if you're using your personal credit cards and you're using it to maintain your business, you're going to see a drop in your credit score as you use them more. And if you were a lender, okay, if you were a lender, which one looks best to you? If this was credit card use or credit use, which one looks like they're going to be less of a risk? So they have set limits. The credit reporting agencies have set limits. They say 50%, anything above 50% has a huge impact. Anything above 30% has an impact, not as big as above 50, but definitely big. You want to keep your use. This is the easiest way to manage your score. Besides adding as an authorized user, this is the second really big way you can do this, is keep your use below 30% when it reports to the credit bureau. So when you look at your credit report, you're going to see date updated or date reported. That's when your balance gets sent from your credit card company to the credit bureaus. So just a couple days before that, and Alan actually went and looked, and he saw the discrepancy in his, but any time that you want to make your payment, make your minimum payment, and then if you can, make an additional or larger payment just before it reports to the bureau and get that mark below 30%. It's kind of a score hack. Now, I mean, obviously, if you're not using your credit well, it's going to show up. It's not going to be hard to find. But if you're just looking for a bump to get you in the door, okay, this is a real easy way. You know, this on this example, you would just have to pay about $260 to get that below 30%. And your score will actually move. These are big needle movers. You get it down below 10%, it actually moves even bigger. So that's why I use this example here. And it's real easy. The closer you get to that top limit, the lenders are looking at that and going, I don't know if that's really such a good risk for us. So here's some 6 credit tips, and I think we're going to provide, I don't know, there's a recording for this, right, Scott?
Yes.
Okay, Alan, okay. So number 1, set goal and be strategic. The first step is always the first step, just like in business, right? You want to set some goals, and then you want to be strategic about how you accomplish those goals. You have milestones along the way, you have checkpoints and so on and so forth. Just like taking a trip across country. You got to know where to get gas and detours. and what to do if there's, you know, a blocked road or something like that. So we can help you do this. This is what I spend the majority of my day doing with businesses, is setting goals and being strategic. Help the business. Just the other day, in less than 3 weeks, we got their score up 40 points. Now, that's not a guarantee. I can't promise that by law, but I can tell you that actually happened just by doing some things that we talked about just a minute ago. Check your credit report and dispute the errors. Sometimes the errors are a little more complex and require a paid service. I don't really get into like bankruptcies and things that you can end up taking, you know, 6 months to manage. We've got some references that we can send you to that have good success with that. But the simple things, we can definitely help you get some dispute letters going and send that out, and you can do it online if you want. Had success with that. Pay your bills on time. Sometimes you can request a deferral. I don't know, now that we're coming to a different mindset after the election, this may change, but now most banks are not allowing deferrals on your payment. That may change. Make the minimum payment on the due date, and then your second payment 3 to 4 days before the closing or the report date on your credit report. That works. That works like a magic. It's crazy how that works. That can move your score 30, 40 points, depending on how you use it. You want to get below a 30% use of all your available credit on your lines of credit or credit cards, and don't apply for new credit or close old accounts. If you have excellent credit, consider applying for 0% credit or business credit. So you get business credit, you personally guarantee your business credit with your good social security number, and then that moves the reporting off of your personal and just keeps it over on business. So that's one way to kind of open up your personal FICO score and your personal credit lines. Become an authorized user on a relative's account. You want to increase your score, reduce interest, and pay down your debt faster. Now, this may be difficult right now because cash flow is kind of slow for some people. We're starting to open up right now, and I understand that. And if you're discouraged, don't be. It just takes time. And we're here for you. We're definitely got some resources to help, you know, leverage your business. We've got social media resources, et cetera. A lot of the things NorCal SBDC offers through their website has some amazing tools. I definitely recommend all those to anybody listening. Some common questions that we have. How do I find out my credit score? Again, Experian.com I found is the easiest way. I like that format, and I pay for that service because it gives me a one-stop shop. I don't get money for that. I'm just saying you can do that. The other ones don't offer the same types of resources. You can also go to Credit Karma, Credit Sesame, some of those. Just realize that you need to check to see if it's actually a FICO score. Checking your credit does not hurt your score. How long do negative items stay on your report? 7 years. Fastest way to improve your credit, be an authorized user on somebody's account or pay down your debt below 30%. What's a good score? 650, 700. 750 is kind of the magic number that a lot of places use. That's when the credit score goes into the excellent category. And once you're above 750, it just seems to open more doors for you, get better terms and better interest rates. Do you have to pay for credit repair? No, credit repair is actually free, the credit repair. But if you've got complex issues on your credit report, it may just save you some headaches from not having to become a credit repair expert. Pay somebody else to do it. Just like you're an expert in your business, people pay you for your services. That's what they exist for. What do I do if I suspect fraud or ID theft? FTC.gov. You might want to freeze your credit. They've got a whole list of steps to do if you really believe you've been a victim of ID theft. Where do you start? Go register with us. All right, simplified.start. And then you can check your credit score. Here's some links for you here. Get a copy of your credit report. Get started building your better credit. And with that, we can quit mine because I know we got your own Q&A, but.
Perfect. Thank you so much, Pat. We've got some questions for you. Julie's asking, what is the, and I'm sure you went over this already, but let's just go over it again. What is the ideal percent of credit utilization?
Ideal is below 10%.
Perfect.
And that's, again, this is with personal consumer credit. Business credit, they don't care how much you use, as long as you're using it wisely and you're paying it on time. Personal credit, consumer credit, below 10%. If you keep it below 30%, you're going to have You're going to have less impact. Once you get above that 30% threshold, the score starts dropping in chunks instead of just pieces.
And is that on for, that's for each individual card rather than the whole picture, isn't it?
It's both. So if you have an individual card that you max out, it's not, and everything I'm telling you, I've done and tried myself just so I can verify it. So you can max out a card. It's going to have a pretty decent impact on your credit. But if you max out all your stuff, you're going to have a big jump. It's going to really drop. So you can have one card that's showing a little high. My recommendation is get everything below 30% and go with the smallest level, a $500 card. So if you have a $500 balance on your, I'm sorry, a $500 credit limit, 50% is $250. So take the ones that you can pay down quickest. They will move your needle.
So Pat, Lorna is asking, does he recommend folks use services such as LifeLock? And somebody asked the same question. What do you think about LifeLock, Norton, or Norton 360?
You know, anything's better than nothing. I don't personally have any guidance on LifeLock. I mean, the guy put his social security number out there on the commercials all the time. Haven't heard from him in a while, so I don't know if he got hacked or what. Here's the deal. In the electronic world, nothing's 100% safe. That's just the bottom line. So somebody's out there that's smarter than anybody else, and they can get your data if they really want it. But LifeLock reduces that exposure. I've heard good things about the company. They're still around. They offer a great service. They monitor the dark web. They do a lot of things for you. That's a paid service. I think it's $99 a year. You can get different levels. I don't know the details about what the best coverage is in LifeLock, but again, anything is better than nothing. Experian offers dark web monitoring and identity theft. I think LifeLock offers like $1 million coverage if your data gets stolen or your identity theft, but there's terms. There's a saying, right? The big print giveth and the small print taketh away. So read the fine print. I know it's boring, but that's where you're going to find the details. And if you're not sure, just compare. Do a comparison between the different services. I think Amex has one too for Amex business card users.
Perfect. And so Graham and Dottie are asking, if my credit card is charging 26% and they will reduce my interest if I arrange a payment plan, how will this affect my score?
Well, 26%, that's painful, because then you're a quarter, $25 of every 100 is going to, well, it's a lot of interest. If you can find another way, I would. Debt reduction programs, they tend to sometimes affect your score. My best recommendation is get out of that high percentage credit card, if at all possible. Either get a low percentage interest rate loan if you can, something. Move it over to another card. If it's absolutely not possible, again, call us, get registered, ask to speak with me or somebody. We can help you at least analyze it and say, this is not going to, this is going to work, this isn't going to work. If they're offering you some sort of a debt reduction strategy, I will tell you this: anything you sign your name to or agree to, you're beholden to. That's a contract. So if you're having trouble making the payments and you miss it, that's another ding. It just becomes bad.
Yeah, it does. It does affect your credit, Dottie. So just know that. And then we have 2 more questions. I'm going to go through them really quickly because we are over right now, but I just want to get these answered. No worries. Julie's asking, so what is the point of credit extension if you cannot utilize it at, if you can't utilize more than 10%? Because we're saying the max should be 10.
This is the joy of consumer credit. I don't make the rules, they do. When I say they, Equifax, Experian, TransUnion, that's the number they look at. The option of that is get some business credit. Go to your lender and ask them to open up a business credit, a business checking account, and get a business credit. Then you can actually use more of that, and it doesn't affect your FICO at all.
Perfect. And then Miguel, where do you, and I'm assuming they're saying commercial score, where do you look for the commercial score?
Sure. Equifax and Experian both have Equifax Business, Experian Business. You kind of got to dig for those links, but they're there. And then Dun & Bradstreet is the third main reporting agency where you get your DUNS number. And that's free. All of them are free. So if you're getting dinged for trying to pay, it's free. NAV, there is a company called NAV, N-A-V, that's kind of a one-stop shop. They're gonna offer you some paid services, but they have some free stuff too.
Perfect. Thank you, Pat, so much. Pat will be with us again next month. I believe he's taking one of the slots on Wednesdays. We will give you that information once we have it and send it out, just so that he's going to another aspect of credit. So thank you so much, everyone, for joining us today. We appreciate your time. Thank you, Heather. Thank you, Alan. Thank you, Janelle. Thank you, Pat. Thank you, Scott. Everyone have a great afternoon, and we'll see you on Wednesday.
Thanks so much, you guys.
Thank you.
Bye-bye.
Thank you.
Thank you.
Bye-bye.